All right. Can somebody read the question for us?
The following
Okay.
in the trial balance of Kwadaso Limited, a trading company as at 30th September 2015.
Okay. So just mention the line
We have
items.
sales.
Okay.
Hello?
Hello. Yeah. Just mention the line items without the figures. So just mention them.
Hello?
Hello.
Hello?
Hello. Can you hear me?
Sir. Please, I didn't hear what you said.
Okay. I said you should the trial balance. You just mention the line items without the figures.
Okay.
Yeah. Just mention
We
sales.
have sales, inventory,
Okay.
cost of sales, selling and distribution expenses, administration expenses, loan notes interest paid, bank interest, investment income, leasehold building at valuation 1st October 2014, plant and equipment, cost and depreciation, computer equipment cost and depreciation, motor vehicle cost and depreciation, available for sale investments, trade receivables, bank, trade payables, deferred tax 1st October 2014, 500 ordinary shares, 8% loan notes 2012 to 2016, 10% preference shares redeemable, revaluation surplus, general reserve, retained earnings 1st October 2014. Additional information: on 31st March 2015, the company made a bonus issue from retained earnings from retained earnings
Okay.
of one new share for every four share in issue of 10 Ghana cedis each. This transaction is yet to be recorded in the books. The company paid ordinary dividend of 2 pesos per share on 31st January 2015 and 2 cedis 60 pesos per share on 30th June 2015. The dividend payments are included in administrative expenses in the trial balance. Provision is to be made for a full year's interest on the loan notes. The finance charge relating to the preference shares is equal to the dividend payable. Non-current assets: depreciation of property, plant and equipment is to be provided on the following basis: plant and equipment 10% on cost, computer equipment 25% on cost.
Hello.
Hello, sorry sir.
Okay.
Computer equipment 25% on cost, motor vehicle 20% on reducing balance. No depreciation has yet been charged on any non-current assets for year ended 30th September 2015. Kwadaso revalues its building at the end of each accounting year. At 30th September 2015, the relevant value is to be incorporated into the financial statement is is it 14.1
Okay.
million. The building remaining life at the beginning of the current year, 1st October 2014, was 25 years. Kwadaso does not make an annual transfer from the revaluation reserve to retained earnings in respect of the revaluation of the in respect of the realization of the revaluation surplus. Ignore deferred tax on the revaluation surplus. The available for sale inventory held at 30th September 2015 had a fair value of 8.4 million Ghana cedis. There were no acquisition or disposal of those inventories during the year. In February 2015, Kwadaso's internal audit unit discovered a final a fraud committed. Oh, a fraud committed. Oh,
Oh, your child is worrying you. I can see. Why? He
sir,
what?
please, can someone continue?
Okay, all right.
I beg. The baby is not cooperating.
Okay, okay.
Okay, thank you.
All right, okay, let me finish it. In February 2015, Kwadaso's internal audit unit discovered a fraud committed by the company's credit manager who did not return from a foreign business trip. The outcome of the fraud is that 500,000 of the company's trade receivables have been stolen by the credit manager and are not recoverable. Of this amount, 200,000 relate to the year ended 30th September 2014 and the remainder to the current year. Kwadaso is not insured against this fraud. VIN II corporate income tax payable estimated on the profit for the year is 3,500,000 Ghana cedis. An amount of 1,200,000 Ghana cedis is to be transferred to the deferred taxation account. Required: prepare the following financial statement of Kwadaso Limited for publication in accordance with International Financial Reporting Standards (IFR IFRS). A. Statement of profits or loss and other comprehensive income for the year ended 30th September 2015. B. Statement of changes in equity for the year ended 30th September 2015 and statement of financial position as at 30th September 2015. D. Show clearly all relevant workings. Show clearly all. Note: accounting policy notes are now required. Okay, so this is a question that carries 20 marks. Okay, and you know that published account is a constant topic that comes in every sitting. Okay, which means that you must practice as many questions as possible. Okay, to be able to, I mean, to be able to be well versed in it. All right, so we are going to solve this question, and I want you to pay attention and observe and also be part of how this question is solved. Okay, so first of all, in examination, this question must be answered in 36 minutes. Okay, you have 3 hours to answer 5 questions. So it means that every question you must spend at most 36 minutes, okay, on the question. You get it. And if after 36 minutes you are not done, you have to stop and move on to the next question. Do you get it? So that is why in examination you have to do the straightforward questions first. Okay, you have to do the questions that are quite straightforward, and that does not require you to like that does not require you to think so much. So you need to start with ratios, and then you solve standards and all that. When you finish, before you come and tackle publish account, because sometimes publish account is quite complex or complicated. So if you solve all the easy ones and you get some good marks, then you come and attempt publish accounts. Okay, at least you fight to get some, at least half mark there, let's say 10 marks out of 20. Okay, and which is a very good mark, which is a pass mark, So let's see how we should go about this question. So the first one is that we should prepare statements of profit and loss. And then the second one is that we should prepare statements of other comprehensive income. So in your examination, when you are going to solve this question, you have to dedicate one page. Okay, one page for statements of profit and loss. Okay, so just one page for it. Then another page for balance sheets, like the way I'm doing. So you have two pages, one page for profit and loss, another page for balance sheets, then another page for your workings. Another page for your workings. Okay, so that then when you finish, then you try to develop the structure of the profit and loss. When you then you also develop the structure of the balance sheet. Okay, because the profit and loss, the structure is, I mean, more standard. We have revenue, cost of sale, and all that. So you just have to just draft it down nicely, and then when you finish, you come to your balance sheet too. The things that should be should be in the balance sheet, you also list them down. So after that, then you move on to your workings. Okay, so let's start with our profit and loss. Okay, so we'll start with Quadaso Limited. Okay, so a statement of profits and loss and other comprehensive income for the year ended 31st or 30th September 2015. Okay, then you underline it nicely like this. Okay, you underline it. Then what else? Okay, then you come to your, then um you go to your trial balance. You go to your trial balance. Where is it? You go to your trial balance. So you just pick all the items that you think in the should be in the income statement. So what are the things that should be in the income statement? Sales, right? Sales will be in the income statement. Do we all agree? So you write your sales here. Okay. Then what else? What else do you think should be in the income statement? Mm-hmm. Okay, inventory is in balance sheet. Cost of sale is in income statement. So cost of sales. Then we have gross profit. After that, what else? Selling and distribution expenses. Okay, that one too. selling and distribution expenses. Then we have administrative expenses. Administrative expenses. Okay, what else? Loan note interest paid. Okay, this one is not part. Bank interest. Okay, which is finance cost. Okay, so finance cost. Okay, what else? Investment income is also income statement item. Hello, are you following? Hello.
Yes, yes, yeah.
Yeah, we are
Fine.
following.
Oh,
I'm
okay,
following.
oh, very good, very good.
We are following.
Okay, very good. So investment income. Okay, leasehold building. This is balance sheet. Plant and equipment balance sheet. This is balance sheet. Motor vehicle balance sheet. Available for sale investment balance sheet. Trade receivables balance sheet. Bank balance sheet. Trade payables balance sheet. Deferred tax balance sheet. Ordinary shares balance sheet. Loan notes balance sheet. Preference shares balance sheet. Revaluation surplus balance sheet. General reserve balance sheet. Retained earnings balance sheet. Okay, so it means that all the rest are all balance sheet items. Okay, so we have our sales, cost of sales, gross profit, selling administrative expenses, distributive expenses, finance costs, investment income. Then we also have tax, right? Income tax. Okay, income tax. Okay, but then when you are able to identify all the line items, you know that there's what we call profit before tax. Before tax, there's what we call profit before tax. Okay, so you just bring this one here. So after this, then we have our tax. Then we have profit after tax. Okay, so this is basically what you do. No, no, hold on. It's profit before tax. Okay, okay. So let's come to our balance sheet. Quadaso Limited. So statement of financial. Let me see. Is it big enough? Statement of financial position. Assets. 30th September 2015. So we have assets, and asset we have non-current assets. Okay, so we go to our trial balance. What are the non-current assets? Okay, this is not we have leasehold building. This is a non-current asset. So leasehold building. What else? Plant and equipment. Okay, it's also plant and equipment. Then what else? We have computer equipment. Computer equipment. Then what else? Motor vehicles. Motor vehicles. Okay, so these are the non-current assets. Okay, all right. Now let's go to are they all okay? Let's go to current assets. Current assets. The current assets. What do we have? We have inventory. Inventory is a current asset. So inventory, we put it here. Then what else? We have available for sale investments. Available for sale investment. Available for sale investment. Then we also have trade receivables. Trade receivables. Trade receivables. Then we also have bank. Bank is the cash in your bank account. So that's that's cash and cash equivalent. Okay. Sorry, this bank is at the credit side. So it means that this is an overdraft. Okay, this bank figure is at the credit side. If it was to be at the debit side, then it would have been an asset. But since it's at the credit side, it means that it's an overdraft. So it has to go to current liability. So this will be out. Okay. All right. So what else? Okay, I think we are done. Okay, let's go to. So we have our total assets. Okay. Now let's go to equities, equity and liabilities. So let's start with equity. Let's start with equity. Okay, equity. What are the equity items? We have ordinary shares, stated capital. So we have stated capital. We have what else do we have? Retained earnings. Retained earnings is also equity. So retained earnings. Okay, what else do we also have? We have revaluation surplus. It's also equity item. Revaluation surplus. Then what else? We have general reserve. General reserve is also equity. Okay. Okay. Is that all? Okay, I think that's all. All right, now let's go to non-current liabilities. So non-current liabilities. So non-current liability, we have 8% loan notes. 8% loan notes, 2012 to 2016. We have 8 8% loan notes 2012 to 2016. Okay, we also have 10% preference shares. Okay, 10% preference shares. Okay, now what else do we have? Then we also have deferred tax. Deferred tax. Okay, so these are like current liabilities, the non-current liabilities. Okay, let's look at the current liabilities. The current liabilities, the non-current liabilities, we have bank overdrafts. This one, where is it? This one, the bank overdrafts. Okay, bank overdrafts. Then what else do we have? We have trade payable. This one, trade payables. Trade payables. Okay, then what do we have again? Bank overdrafts, trade payables, and then interest payable. Interest payable. And income tax payable. Income tax payable. Okay, so now we have our total equity and liabilities. All right, so in examination, try and put together your structure. Okay, so when you finish, before you start tackling the question one by one. Okay, so now that we've done our profit and loss structure, we also have our balance sheet. Okay, so the next thing we need to do is we need to start with our workings and be able to fill in the gaps that we have left. Fill in the gaps. Okay, so sales. There's no adjustment to sales. So in examination, the item that do not require any adjustment, you just write them straight. Okay, the ones that you don't have to do any adjustments, you just have to put them down. Okay, so for instance, our sales figure, there's no adjustment for us to make, so you just have to put it down. Then we have um okay, now let's go to the notes and take them one by one. And then the note too, there are certain notes that are standard. Okay, so um there are certain notes that are standard. So what you do is you have to start with the standard note first. Okay, if you look at this note one is talking about bonus issue and all that, ordinary dividends, and but there are standard notes or workings that you have to do. One is depreciation. You have to do the PPE schedule, and the PPE schedule where you have to calculate depreciation and all that. Another constant component is income tax. You always be asked to calculate the income tax. Okay, so one, you do this and you do this. Then sometimes you have to calculate finance costs. Finance costs. Okay, so these are the things. These are the like almost like standard workings that you have to do. So when you do these standard ones, When you finish, then you come and look at the other adjustments. Okay, come and look at the other adjustments. So let's start with our PPE schedule first, our depreciation and our our non-current assets. Okay, so let's go to our non-current assets. No start from Ivy. Ivy. Okay, so it's Ivy non-current assets. Depreciation of property, plants and equipment is to be provided on the following basis: plant and equipment 10% on cost, computer equipment 25% on cost, motor vehicles 20% on reducing balance. No depreciation has yet been charged on any non-current asset for the year ended 30th September 2015. So they are telling us that they have not calculated any depreciation. So we have to calculate the depreciation for the year and also find the carrying amount of these assets. Okay, so we have to take the assets one by one and find their carrying amount. So let's start with plants and equipment. Okay, so plants and equipment. So Watkins one. Okay, plants and equipment. Okay, now what is the cost? What is the cost of our plant and equipment? So you have to find it in the trial balance. Where is our plant and equipment? This is our plant and equipment. Okay. So the cost is 13,750. This is the cost. And this side is the accumulated depreciation. Okay, so our cost is 13,750. So you come and write it here nicely like this. Then accumulated depreciation. So our accumulated depreciation is 3,200. This one, 3 3,200. So it means that our carrying amount at the beginning of the year, carrying amount, our carrying amount at the beginning of the year is this minus this. So this is a carrying amount at the beginning of the year. Okay. Before we charge depreciation for the year, and we were told that the depreciation for the year is 10% on cost. 10% on cost. So it means that we have to find 10% of this figure. 10% of this figure. Okay, so it will be 10% times 1370.
10% of 13,750.
Yeah, 10 and 7, yeah, 750. Yeah, so 13750. Okay, so we are going to get sorry, we are going to get this times 10%. Okay, we are going to get 1375. Okay, that's fine. So now our carrying amount at the end of the year will be this minus this. So 9175. So this is the carrying amount of our plants and equipment. So now that we found this figure, you can come and put it here. Plants and equipment. You can come and put it here like this. Uh-huh. You see. So that's how you approach. When you find the figure, then you go and post it. Okay. All right. Let's look at our what else? Let's look at our computer equipment. Computer equipment. Okay, computer equipment. What is our cost? Our cost is where is it? This one. This computer equipment. Our cost is 7,200. This one. Okay, 7,200. What is our accumulated depreciation? Our accumulated depreciation is,
7,200.
yeah, 7,200.
200.
Yeah,
Then there's 2,000 with the accumulated depreciation.
very true. This is accumulated depreciation. Okay, so this will be our carrying amount.
2,000.
Yes. So this will be our carrying amount. 5,200. Okay. Then we calculate our depreciation for the year. And what is the depreciation for the year? It's 25% on cost. This one. 25% on cost. Okay, so 25% times 7,200.
Uh,
Right.
7,200. So
Very
that's
good.
7,200.
11,400. Oh, okay. That's good. 7,200. So you get 1,008. Okay, so our carrying amount will be how much? This minus this. 3,400. Okay, so you put your 3,400 here. 3,400. Okay, let's look at motor vehicles. Motor vehicles. So this is working one, working two, working three. So motor vehicles. So what's the cost? What's the cost of the motor vehicle? It's 1,500. The accumulated
1,500.
okay. The accumulated depreciation is 400. 1,500. Accumulated depreciation is 400. Okay, 400. Okay,
Yeah, 400.
the current amount is this minus this. You get 1,100. Okay, that's good.
Mm.
So what is our depreciation? Hey, this one, where is it coming from? Yeah, let me see. Okay, we have our depreciation for the year, and it is how much? 20% reducing balance. 20% reducing balance. So reducing balance means that you apply the depreciation on the current amount. On cost means you apply the depreciation on the original cost. So reducing balance here means we are going to apply the depreciation of 20% on the current amount of 1,100 like this. Okay, because this is reducing balance. Then 1,100. So our current amount at the end of the year will be this minus that 880. Okay, so you put 880 here. Okay, now let's look at our leasehold building, which is note 4. So Leasehold building. Leasehold building, there's a note here. Kwadaso revalues eight buildings at the end of each accounting year. At 30th September 2015, the relevant value to be incorporated in the financial statement is 14,100,000. The building's remaining life at the beginning of the current year, 1st October 2014, was 25 years. Kwadaso does not make an annual transfer from the revaluation reserve to retained earnings in respect of the realization of the revaluation surplus. Ignore deferred tax on the revaluation surplus. Okay, so this this um this note is telling us that the building is carried at revalued amount. According to IAS 16, you can use the cost model or the revaluation model to carry PPE. You can use the cost model or the revaluation model to carry PPE in your balance in your books. Okay, now in this question, Kwadaso is using revaluation model to carry its buildings. Okay, but um, there are certain principles in the use of the revaluation model. Okay, revaluation. If you use the revaluation model, it means every year you have to value the property. You have to find a qualified valuer to come and value the property. And whatever value the valuer will arrive at is what will show in the balance sheet. So every year you have to update the value of the property. So the note is saying that last year when they did the revaluation, they got 14,100,000. No, sorry, this current year. Sorry, at the end of the year, the current year, they got 14,100,000. But last year, when they did the revaluation, which is this figure, that's why you can see 1st October. You see, so it means this is the figure for last year. So when they did the revaluation last year, they got 14,000. But when they did the revaluation at the end of the current year, they got 14,100,000. So it means that the value has appreciated. Okay, initially it was at the beginning it was 14 million. Now it has increased to what? 14,100,000. So it's likely there's a revaluation surplus. Okay, so let's see how um, we can find the carrying amount of this leasehold building. So we will start with um, building at valuation. Okay, this is the opening balance. It was 14,000. Okay, but 14,000. And when they did the revaluation last year, what was the remaining useful life? The remaining useful life of the building was 25 years. So anytime you do a revaluation, you also have to update the remaining useful life of the building. So it's like the building is new. Everything is new. The value is new. The useful life is new. So you start to depreciate it all over again. Do you get it? So when we did the revaluation last year and we got 14 million, we also got a new remaining life of 25 years, which is here. So we have to depreciate this building by 25 years. Do you get it? So our depreciation will be 25 years. So it will be 14,000 over 25. So what will you get? 14,000 over 25. You get 560. So the carrying amount at the end of the year should have been, sorry, should have been 14,000 minus 560. Okay. 18,440. 440. Okay. But this is the end of the year, 30th September 2015. But they did a revaluation. And they got 14,100,000. Okay, so revalue amount 14,100. So you see the current amount should have been 13,440. But when they did a revaluation, they got 14,100. So it means there's a revaluation surplus. So this is revaluation surplus. Okay. And the revaluation surplus is the difference between these two figures. So this minus this will give you the revaluation surplus. Okay. So it means this revaluation surplus will go to um this one will go to the balance sheet. The revaluation surplus will go to the balance sheet and the revaluation surplus. Okay, so you have to note this very well. Okay, so we have to go to our balance sheet and then the leasehold building, because we revalued it to 14,100. This is the figure that we have to use. Okay, at the end of the year. So in our balance sheet, the leasehold building will be carried at 14,100 because this is the revalued amount. Okay, so you can see that we are done with our non-current assets. You see, and doing those workings to we will be able to find our depreciation for the year. Okay, we can find this is the depreciation. We can find our depreciation for the year. This is depreciation. This is also depreciation. This is also depreciation. So you have to add all your depreciation together. This is also depreciation. Do you get it? Mhm. So we can even use this working to find our depreciation. So depreciation charge. But depreciation will go to your income statement. So plant and equipment. Plant and equipment is 1373. So 1373. Okay. Um, computer equipment is 1,800. 1,800. And motor vehicles is 220. Motor vehicle is 220. Then what else? Leasehold building is 560. Leasehold building. So we know our depreciation for the year, so which is this plus this plus this plus this 3955. So this is our depreciation for the year. Okay, what else do we have to do? Okay, now that we know our depreciation, okay, we can do the rest of the work. We can have our cost of sales here. The cost of sale, they give us the figure straightforward, so we can just put it here. Yeah, and once you know your sales and cost of sale, you can find your um you can find your gross profit. You get it. You can find your gross profit. Okay, and the depreciation, you can sometimes some companies add it to cost of sales. Some companies also add it to administrative expenses, or they leave it as a separate line item. So whatever method you use is okay. You can add it to cost of sale. You can add it to selling and distribution. Okay, you can't add it to selling and distribution expenses, but you can add it to administrative expenses. Okay, or you can leave it as a line item. Okay, so this depreciation that we have calculated here, we need to find a place and add it. Okay, so sometimes some questions you can add it to cost of sales. So you can add this amount, this figure to the cost of sale, or you can add it to administrative expenses, or you can dedicate one line item as depreciation. Okay, so whichever one you use will be okay for you. Okay, so in our case, let's say we want to um, dedicate one item for it. So we have depreciation expenses. Okay, so we can bring it here 3955. So 3955 like this. Okay. So we have selling and distribution expenses. Okay. They have given us the figure here. So you don't have to stress yourself. So you come and put it here nicely like this. You see that our income statement is taking shape small small. Okay. So we have our administrative expenses. Now, this administrative expenses, there's some little work for us to do. That's the problem here. If you look at this note I, you see that the company paid ordinary dividends of 2 Ghana cedi 20 pesos per share on 31st January 2015 and 2 Ghana cedi 60 pesos per share on 30th June 2015. Their dividend payments are included in administrative expenses. You see the problem here. The dividend payments are included in the administrative expenses in the trial balance. So we know that we don't add dividends to administrative expenses. Payment of dividend is not an administrative expense. It's a distribution to owners, and it is taken from the retained earnings. We pay dividends out of retained earnings. Do you get it? So the retained earning is the profit for the owners. And so if you want to give them some share of profits, we give them dividends or give them that profit out of the retained earnings. We give them part of their earnings in the company. So remember that we dividend is taken out of the owner's earnings or profits. Okay, so it's not taken out of any other place. Do you get it? So it means that this entry is wrong. Including dividends in administrative expenses is wrong. So it means we have to reverse it. We have to reverse it. But we need to know how much dividend was paid before we can take it out of administrative expenses. You see, they didn't tell us that, oh, they paid 2,000 Ghana cedis as dividend. In that case, we will just take out 2,000 Ghana cedis from the administrative expenses. But they didn't tell us. So we have to work out and find out how much dividend was paid before we can now take it out of the administrative expenses. So we all know that dividend is paid according to the number of shares. So it goes like this: 2 Ghana cedis per share. As you can see, 2.2 Ghana cedis per share. So it means dividend is paid according to the number of shares held in the company. So for you to know how much dividend was paid, you need to know the number of shares. Okay, they gave us, okay, every share we are they paid 2.2 Ghana cedis. That's fine. But how many shares? That will help us to know the total dividend that they paid. So right now we need to know the total shares that the company has. Then once we know that, we can multiply that by 2.2 to know the total number of dividends. No, sorry, the total amount of dividend that was paid. So let's see how to find the the number of shares of the company. Okay, so note one: on 1st January, sorry, on 31st March 2015, the company made a bonus issue from retained earnings of one new share for every four shares in issue at 10 Ghana cedis each. This transaction is yet to be recorded in the books. Okay, so at the beginning of the year, the company had 500,000 ordinary shares. Okay, so let's do some little workings here. Okay, this is the payment of dividend. Okay, so number of shares at the beginning of the year. The company had 500,000 shares. Okay, at the beginning of the year, which is this figure, 500,000 shares. Then on 31st March, the company made a bonus issue from retained earnings of one new share for every four shares in issue at 10 Ghana cedis each. So if you have done earnings per share, there are two types of share issue. We have bonus issue and we have right issue and issue at full market price. And if you've done earning per share before, you know that bonus issue is like giving shares to existing owners for free of charge. They don't pay for the shares. Okay, that is why it is called bonus issue. Bonus issue. You give them free shares. So if the owner has maybe four shares, let's say four shares, and then you do one for four, it means He's going to get one more shares. So one more share. Okay. So in this case, on 31st March, the company made a bonus issue. And the issue is one new share for every four shares held. Okay. So they are saying that the bonus issue that they made, if you have four shares, you are going to get additional one. So every four share is plus one new share. Every four share, you get one new share. You see, it's like buy one, get one free. So if you have four shares, you get one more share. If you have eight shares, you are going to get two new shares like that. Ehen. That's how the bonus issue works. So how do we know the number of new shares that came out of the bonus issue? Okay, the total number of shares at that time was 500,000, and they made one for four. Every four shares you have, you get one new share. So how many new shares came out of it? So we need to find that. So number of new shares. It is one for four. Every four shares you have, you are going to get one new share. So it means that it will be 500,000 over four. So this is the new shares that came out of the um, bonus issue. Do you get it? So the total shares after the bonus issue will be 500,000. It will be this plus this 625,000. So this will be the number of shares after the bonus issue. Okay, that's good. So now let's go back to our question. So the question says that the company paid ordinary dividends of 2.2 Ghana cedis per share on 31st January 2015. So on 31st January, the company paid dividends of 2.2 Ghana cedis per share. So you have to ask yourself, how many shares were in issue as at 31st January 2015? So what do you think? How many shares were there as at 31st January 2015? Mm-hmm. Who can tell us?
I think it's 500,000 shares.
Yeah, very good. So it's 500,000 shares. So that means the dividend paid at that date, okay, will be dividend paid on that date will be the 500,000. That's the number of shares at that time.
The question again.
Um, the question is how many shares were there as at 31st January 2015? Okay, and Pius has answered the question. Okay, so there were 500,000 shares, and then the dividend payment is 2.2 Ghana cedis per share. So you just multiply it by this. So this is a dividend that was paid. This is a dividend that was paid on this is a dividend that was paid on 31st January 2015. See the first January 2015. So this is a dividend that was paid on that date. Okay. Then they said the company paid another dividend again. And 2.6 Ghana cedis per share on 30th June 2015. This is the company made two dividend payments. One was on 31st January 2015. Another one was on 30th June 2015. and the other one on 30th June 2015 was 2.6 Ghana cedis per share. So you also have to ask yourselves, how many shares were in issue on this date? On this day, how many shares were there? So who can tell us how many shares were there on 30th June based on the workings we did?
Six 625,000 shares.
Okay, very good. So on this 30th June, the company had this number of shares. So to know the dividend that was paid, we have to multiply 625,123 times 2.6 like this. Okay. So this is the dividend that was paid. So the total dividend that was paid is this plus this. Okay. So this is the dividend that was paid. 2,700 and 25,000. So this is the dividend that was paid. Okay. So it means this is the figure we have to take out of what's the name? We have to take out of administrative expenses because they said they included this payment in administrative expenses. So we have to take this out of administrative expenses. Do you get it? Okay. So let's calculate our administrative expenses.
Mark, Mark,
Hello?
hello, Mark.
Yeah.
Yeah, I was asking how you got the 110, yeah, 110, the dividend paid in the 31st January 2015. How you got that figure?
Oh, okay, okay, okay. All right. So we said that dividend is paid according to the number of shares
Yeah.
at that particular time. So at that on 1st January, so on 31st January, there were 500,000 shares. The company had 500,000 shares.
Yeah.
And then they pay dividends of 2.2 Ghana cedis per share. Do you get this? So if you multiply 2.2 by the 500,000, you get the 11, is it 11 million? You get 1,100,000 shares. So
Ah,
what?
okay.
Yeah,
Okay, I get it. I get it now.
yeah,
Then the other one is sure. So the other one is 2.6
yes.
times the 500,000.
No, the other one also the number of shares increased because they made a bonus issue. So it's increased to
Uh,
625,000. So we did the workings
so
here.
that'll be used on that one.
That will be based on the that one, not on the first.
Yes, that one. Yeah,
Yeah, not on the
first one.
original 500. Yes, yes.
But that one is on 30th June.
Yeah, 30th June. Yes. So, but on that day, the company had 625,000 shares. Not 500,000 shares because they made a bonus issue along the line. Yeah, do you get it?
I guess it.
Okay, very good.
Yeah.
Okay, so now let's look at our
Let's go on.
administrative expenses. Okay, so the administrative expenses per our question, we were given how much? We were given 8540. This one 8540. So 8540. Now we have to take out the dividend that was paid. This dividend, we have to take it out. because they included it. Okay, so it will be 2725. They included this, so we have to take it out. Okay, that's fine. Now let's look at another note. There's an interesting note here. The VI, the fraud issue. In February 2015, Kwadaso's internal audit unit discovered a fraud committed by the company's credit manager who did not return from a foreign business trip. The outcome of the fraud is that 500,000 of the company's trade receivables have been stolen by the credit manager and are not recoverable. So this has become a bad debt. This 500,000 has become bad debt. Okay. Because it has been, somebody has chopped the money and I mean it's gone. So it's bad debt. So of this amount, 200,000 relate to the year ended 30th September 2014 and the remainder to the current year. Kwadaso is not insured against this fraud. Okay, so what this is saying is that this is a fraud issue. The company had a receivable of 500,000. Okay, and then the manager has chopped the money and they cannot get the money. So it is bad debt. They have to write it off as bad debt. And bad debt is an expense. You have to show it in your income statement as bad debt. But they are saying that this bad debt, 500,000, part is for the current year, and part is for the previous year. Do you get it? And they said the part for the previous year is 200,000. That's the for the year ended 30th September 2014. So it means that the current year bad debt to be written off is 300,000. Do you get it? The total amount is 500,000. That's the money that the manager has chopped and is happy. I mean, he has finished the money. But they are saying that um, some part is for the current year, some part is also for the previous year, the past year. So the one for the current year, you have to account for it in the current year income statement. Okay. And the current year amount is 300,000 because the question said that 200,000 relate to the past year. So if that's the case, then 300,000 will be for the current year. Okay, so we have to add this one as an expense. So we can add it to administrative expenses. Okay, as fraud. Okay, so the our administrative expenses will now become this amount minus dividend. We are taking the dividend out. Then we will add the fraud to it. This is like bad debt, so we will add it. So we have 6115. Okay. 6115. Okay, so um you have to come here and then show your 6115 here. All right. Okay, now let's calculate finance cost and then we'll end for today. I think we are almost done, but it's getting late. So let's do our finance cost and then we'll be out of here. So let's go to finance cost. Finance cost. So finance cost has to do with interest accrued or the interest that accrued during the period. Okay, the interest that accrued during the period. Okay. So we have to go to our trial balance and find out any interest that accrued, okay, during the period. Okay, so the first one is bank interest. You can see bank interest is here. So it's an interest that accrued during the period. So bank interest, it was 85. And what else? We have another interest. Okay, all these are not interests. We have 8% loan notes, loan notes. So you have to pay interest on this loan. The company has a loan notes and it's 8% interest. So we have to add it here. 8% loan notes. So the interest will be 8% times 3,500. This one. 3,500. So you get, so this 8% times 3,500. Okay, that's the loan notes. Then the next one is the 10% preference shares. This is also an interest bearing instrument. 10% preference shares. Okay, so 10% preference shares. So that one too, it will be 10% of 3,000. This one, 10% of 3,000. So the interest will be 10% times 3,000 like this. Okay, so when you finish, I think that's all for the interest. That's all for the interest. So when you finish, then you add all the interest together. This plus this plus this. So this is our interest, 585. So this is interest or finance cost. Okay, so 585. So 585. 585. Okay. Then okay, investment income, we can easily get it here. The investment income is here. They give us the figure, so we don't have to stress ourselves. Just 360. So 360. Okay, so now we can have our profit after tax and then income tax and profit before tax, tax and profit after tax. So our profit before tax will be, it will be this, our gross profits minus our depreciation minus our selling and distribution expenses minus our administrative expenses minus our finance cost plus investment. So this is an income, you see. So you have to add it. But all the rest are expenses, so you have to subtract. So 1 7.
I mean, we'll add a profit before tax.
Hello.
Yeah, I was saying that we'll add the profit. The profit before tax will be added.
The profit before tax.
Will be added.
Yeah, yeah, will be added.
Would that
Yeah.
want to be sub? Yeah.
Okay.
That's what
So
I was asking.
this figure, you deduct your income tax and then you get profit after tax. Do you get it?
Yeah.
This
Yeah.
figure you get here. You okay? Let's calculate our income tax. Then we can finish this. Um, we can finish our um we can finish our income statement. So let's just calculate our income tax and then we'll be done. So income tax. Okay, so for you to find the income tax for the year, there are um, certain things that you need to look at. So the first one is over provision or under provision of the previous year's income tax. You know, income tax is a provision that companies make. Okay, income tax is a provision. What you propose as a tax you will pay is usually not GRA will tell you to pay. So usually it's a provision that company makes that okay, this year we are making provision to pay maybe 10,000 as income tax. But GRA may make the
As
company.
your presentation is not showing.
Oh, okay, it's not showing. Okay, the GRA may ask the company to pay more or less. So sometimes, so like the company can make provision that will pay tax of 3,000, but GRA can say that okay, pay tax of 4,000. So this is what under provision. You provided for this, but GRA say pay for. So this is under provision of 4,000. Sometimes you can also make provision of 4,000, and GRA can tell you to pay 3,000. So here it is an over provision. So for you to calculate the income tax expense for the current year, you have to find you have to find out whether there's any over provision or under provision for the previous year. When you finish, then you will find a tax provision for the year. The tax provision. The tax provision for the current year. Then when you finish, you also have to check whether there's any increase or decrease in deferred tax. Whether there's an increase or decrease in deferred tax. So these figures come together to form the tax expense for the year. Okay, so that is what we are going to use to determine our tax expense for the year. So um let's go to our question. So note VII talks about tax. Note VII. So it says that in corporate income tax payable estimated on a profit for the year is 3,500,000. So this is the tax provision that the company made for the year. So the question didn't state whether there's any over provision or under provision or anything like that. So it means that this one will be zero. But our tax provision for the year is 3,500,000. This is the provision that the company made for tax for that year, for the current year. So it will be 3,500. Then you have to ask yourself, is there any increase in deferred tax or any decrease in deferred tax? So if you look at this, it says an amount of 1,200,000 is to be transferred to the deferred taxation account. So it means deferred tax has increased by this amount. That's why we are transferring it to the deferred tax account. So there's an increase of deferred tax. Do you get it? There's an increase in deferred tax. So we have to add the increase in deferred tax, which is 1,200. So the tax expense for the year will now be this plus this plus this 4,700. And always remember that tax will come. Every question you do working on tax. So you have to master how to calculate this. So this is 4,700. 4,700 like this. So now we have our profit after tax of this 12,770. So this is our profit after tax. Okay, this is our profit after tax. Okay, is it difficult or is cool? It's very cheap.
Oh, it's cool.
Yeah, it's normal.
You may just have to just go through again.
Yes. Sir, please, did you record the session?
Yes, yes, I recorded. Yes.
Okay.
Okay. So we have to meet. We have to find time and meet and finish this question before next week. We meet this time. Okay. So what we need to do is we need to finish the balance sheet, and then yeah, we just need to finish the balance sheet. Okay. Thank you very much for joining.
Can we do that tomorrow?
Okay, tomorrow. Yeah, we can do that tomorrow. Yeah, yeah, you can do that tomorrow. Maybe tomorrow around this time. Yeah, around this time we can. So if we can come around tomorrow, we can finish it. Yeah,
Yeah, around this time.
yeah, around this time we can finish it. Okay, so
Oh,
on
okay. All
on
right.
this note, thank you very much for joining, and I will see you, God willing, tomorrow. Okay, so bye for now.